Welcome to Tech Monetize Official, your go-to destination for in-depth analysis and clear explanations of the most important trends shaping the world of technology and finance. Here we break down the biggest stories in tech and finance, making complex topics accessible and engaging for everyone. Whether you're a seasoned investor, a tech enthusiast, or just curious about how these industries impact your daily life. Today, we're diving deep into Nvidia, a company that's not just at the heart of the AI revolution, but also a lightning rod for debate on Wall Street and beyond. Nvidia's influence stretches from the data centers powering tomorrow's artificial intelligence to the graphics cards in your favorite gaming rigs. The big question on everyone's mind: is Nvidia still a smart investment, or is it a bubble waiting to burst? With its stock price soaring to new heights, investors and analysts are split on whether this growth is sustainable or if a correction is looming. This isn't just a question for Wall Street insiders. It matters to everyone, from professional traders making split-second decisions, to everyday people planning for retirement, to anyone with a 401k or mutual fund that might be exposed to tech stocks. On one side, optimists see Nvidia as the backbone of AI's future, fueling breakthroughs in everything from self-driving cars to advanced robotics and cloud computing. They believe Nvidia's technology is essential for the next wave of innovation. On the other hand, skeptics warn that Nvidia's valuation is out of control, pointing to sky-high price-to-earnings ratios and the risk of a sudden market correction. They caution that even the most promising companies can face setbacks. In this episode, we'll explore both perspectives in detail, examining the factors driving Nvidia's meteoric rise and the potential challenges that could threaten its dominance. We'll look at market trends, financial data, and expert opinions to give you the full picture. Our aim isn't to tell you to buy or sell, but to provide a clear, balanced view so you can make informed decisions. We believe that understanding the risks and opportunities is key to navigating today's fast-moving markets. By the end of this video, you'll have the facts, context, and insights you need to make your own call on this pivotal company. So, are you ready to get started? Let's jump in and uncover the real story behind Nvidia's rise. Nvidia started as a leader in gaming graphics cards, building a loyal following among PC gamers. But its real breakthrough came when researchers realized Nvidia's GPUs were perfect for powering artificial intelligence. Suddenly, Nvidia became the go-to supplier for the world's biggest tech companies building AI data centers. Its chips are now the backbone of the AI revolution, making Nvidia's performance a barometer for the entire industry. When Nvidia reports strong earnings, the whole tech market takes notice. Any sign of weakness sends shockwaves through Wall Street. Nvidia's influence is so profound that its quarterly results move markets. In short, Nvidia is the engine powering today's AI boom. Nvidia's growth since the AI boom has been staggering. Once a steady performer, its revenue and profits have multiplied, shattering expectations. The demand for its data center GPUs, like the H100, has sent sales soaring. In some quarters, its data center revenue alone surpassed the company's total revenue from the previous year. This explosive growth has driven its stock price to record highs, rewarding early investors with massive returns. Nvidia's near monopoly on AI hardware and relentless innovation keep fueling investor excitement. The company isn't slowing down. It's already rolling out the next generation of AI chips, like the Blackwell platform. Nvidia sees AI expanding into every industry, promising years of continued growth. That's why many believe the stock could still have room to run. But is this pace sustainable? Bulls argue Nvidia's dominance is just beginning. They see the AI revolution as a multi-decade trend, with Nvidia as its primary beneficiary. The company's moat isn't just its hardware, it's the CUDA software ecosystem, used by millions of developers. Switching away from Nvidia is costly and complex, locking in customers. Nvidia's rapid innovation cycle keeps it ahead of rivals like AMD and Intel. The total market for AI computing could be far larger than most imagine. CEO Jensen Huang envisions a world where every country builds its own AI infrastructure. In this future, demand for Nvidia's chips could be nearly limitless. If this vision plays out, Today's high valuation might look cheap in hindsight, but even the strongest moats can be challenged. Bears warn that Nvidia's stock is priced for perfection, meaning that even the slightest misstep could send shares tumbling. The company's meteoric rise has captured the imagination of investors everywhere, but it's also raised eyebrows among those who remember past tech bubbles. Its valuation is sky high, making it vulnerable to any disappointment. With price-to-earnings ratios far above historical averages, some analysts argue that Nvidia's current price bakes in years of flawless execution and relentless growth. If the company misses earnings, or if growth slows even slightly, the stock could face a sharp correction. Competition is heating up. AMD, Intel, and even Nvidia's own customers are developing rival chips. The race to dominate the AI and data center markets is fierce, and new entrants are investing billions to catch up. As technology evolves, today's leader can quickly become tomorrow's laggard. If these efforts succeed, Nvidia's market share and profit margins could shrink. The company's dominance is not guaranteed, and any erosion in its competitive edge could have outsized effects on its bottom line and investor confidence. The semiconductor industry is notoriously cyclical, with booms often followed by painful busts. Demand can evaporate quickly, leaving companies with excess inventory and falling prices. Investors who ignore these cycles risk being caught off guard when the tide turns. Bears worry we're in an AI-driven boom that could quickly reverse if demand slows. If businesses pull back on spending, or if the next big thing in tech shifts away from AI, Nvidia's growth story could unravel just as quickly as it began. Geopolitical risks add another layer. U.S. restrictions on chip sales to China threaten a key market. Trade tensions and export controls could limit Nvidia's access to crucial customers, impacting revenue and long-term prospects. Any escalation could hit Nvidia's growth hard. The company's global supply chain and customer base make it especially sensitive to international disputes and regulatory changes. For skeptics, the combination of extreme valuation, rising competition, and global tensions makes Nvidia a risky bet. The stock's rapid ascent has created both excitement and anxiety, as investors weigh the potential for further gains against the risk of a sharp reversal. The question remains, is this a new era of unstoppable growth, or just another chapter in the boom and bust cycle of tech stocks? Even giants can stumble, and history is filled with examples of market darlings that fell from grace. Let's weigh both sides before making a call. Bulls see Nvidia as the arms dealer for the AI revolution, with a moat as strong as Apple's iOS ecosystem. To them, Nvidia isn't just another chip maker. It's the backbone of a new era, powering everything from self-driving cars to advanced robotics and generative AI. The company's relentless innovation and first-mover advantage have created a sense of inevitability around its dominance, making it a favorite among growth investors who believe the AI wave is only just beginning. They believe the company's software and hardware lock-in will keep competitors at bay for years. Nvidia's CUDA platform, for example, has become the industry standard for AI development, making it difficult for rivals to catch up. Its chips are not just faster. They're deeply integrated into the workflows of the world's leading tech companies, creating a sticky ecosystem that's hard to disrupt. For these optimists, Nvidia's position seems unassailable, at least for the foreseeable future. History offers examples, like Cisco during the internet boom, where infrastructure providers thrived, even after bubbles burst. Cisco's routers and switches became the plumbing of the internet, and for a time, it looked unstoppable. Bulls argue that Nvidia could play a similar role in the AI age, providing the essential tools and platforms that power the next wave of technological transformation. Even as markets fluctuate, the underlying demand for infrastructure can remain strong. But bears urge caution, recalling tech bubbles where valuations soared far ahead of reality. They warn that excitement can quickly turn to disappointment if growth slows or if new competitors emerge. The tech world is littered with companies that once seemed invincible, only to be humbled by changing trends or disruptive innovation. For every Cisco, there's a cautionary tale of a company that flew too close to the sun. They point to Intel's fall from dominance as a warning. No company's lead is permanent. Intel once set the pace for the entire semiconductor industry, but missed opportunities and strategic missteps allowed rivals to catch up, and, in some cases, surpass it. Bears argue that Nvidia could face similar risks if it fails to adapt, or if the AI landscape shifts in unexpected ways. Competition, industry cycles, and strategic missteps can erode even the strongest positions. The pace of technological change is relentless, and today's leader can quickly become tomorrow's laggard. Regulatory pressures, supply chain disruptions, or a breakthrough from a rival could all threaten Nvidia's dominance. The market rewards innovation, but it can also be unforgiving to those who stumble. The central question: is Nvidia a new kind of company, or will it face the same old risks? Is its current dominance a sign of lasting change, or just another chapter in the ongoing story of tech disruption? Investors must weigh whether Nvidia's advantages are truly sustainable, or if history is destined to repeat itself. Both sides have compelling arguments. The optimists see a future shaped by AI, with Nvidia at the center. The skeptics see echoes of past manias, where hype outpaced reality and valuations eventually came back to earth. The truth may lie somewhere in between, but the stakes are high for anyone considering an investment. The answer depends on your view of the AI revolution's scale and Nvidia's ability to maintain its edge. If you believe AI will transform every industry and Nvidia will remain the go-to provider, the upside could be enormous. But if you think competition will intensify or the market will cool, caution may be warranted. Are we witnessing a once-in-a-generation opportunity or another case of market hype? The answer isn't obvious, and the risks and rewards are both significant. As with any transformative technology, the path forward is uncertain, and fortunes can change quickly. The debate is far from settled. Experts, analysts, and investors continue to argue both sides, and new developments could tip the scales at any moment. The only certainty is that the story of Nvidia and the AI revolution is still being written. Let's talk about what this means for you. Whether you're an investor, a tech enthusiast, or simply curious about the future, understanding both the optimism and the caution surrounding Nvidia can help you make more informed decisions in a rapidly changing world. If you're finding this analysis helpful, please subscribe to Tech Monetize Official. Your support helps us keep delivering in-depth, balanced content on the biggest trends in tech and finance. We're building a community for people who want clear, accessible analysis, not hype. Subscribing ensures you won't miss our future deep dives. We value your feedback and read every comment. Thanks for being part of the conversation. Now, let's break down what you should consider before investing in Nvidia. Before investing in Nvidia, consider your risk tolerance. This is a high volatility stock. If big price swings make you nervous, it might not be right for you. Think about your time horizon. Are you in for the long haul or looking for quick gains? Diversification is key. Don't put all your money in one stock, no matter how exciting. Make Nvidia just one part of a balanced portfolio. Do your own research, read reports, listen to earnings calls, and understand the industry. Don't invest based on hype or fear of missing out. Ask yourself, do you truly believe in the long-term AI story and Nvidia's role in it? Your conviction should drive your decision. So, is Nvidia an undervalued gem or an overheating risk? Both sides have strong arguments, and the answer isn't simple. Nvidia sits at the center of a massive technological shift, but faces real risks from competition, cycles, and geopolitics. Your view will depend on your belief in the AI revolution and Nvidia's staying power. Investing is about weighing opportunity against risk. There's no one-size-fits-all answer. Thanks for joining us for this deep dive. If you found it helpful, please subscribe. We'll keep bringing you clear, balanced analysis on the stories that matter. See you in the next one.